Hey guys, Akil Stokes here. Welcome back to the weekend video. This week, I'm going to share with you a trade review that we did in our live room, walking through how to separate high versus low quality trading opportunities, and also talking about the importance of top-down analysis. Seems like there should be some sort of entry here. I don't see. All right, so I'm assuming you're looking for a short entry. What do you have what would be the higher time frame you'd like to use for this? Would it be an hourly, a 4-hour? What would you say if we had to choose one for a higher time frame to gain some perspective on this move? Hourly, 4-hour? Do you have a preference in one? All right. We'll take the hourly. So let's go through our process, IPDE. So let's identify on an hourly chart. So what has price recently done? We can go 4-hour. All right. So what has price recently done on the 4-hour? What would you guys say? I'll draw some lines here to... We've tested and held structure. All right. And again, there's going to be a different perspective between a 4-hour, an hourly, and a 15. So it's important that we have an idea of what time frames we use, right? We make too big of a jump in our time frames, we can run into trouble, right? You guys ever try going from like a daily to a 15, right? Two completely different stories. I don't think there's any reason you should use a daily chart. The 15-minute chart has nothing to do with the daily, or like a 5-minute chart has nothing to do with the daily. So you got to be careful of how big of jumps you're making. You can't see something on the daily and then go down to the 5, because you're playing two different types of games, right? So we got to make sure that our time frames we got to be consistent in using them, but making sure that our time frames are in the right kind of alignment as well, so that we're not getting two different stories. Okay, so we got a test and hold here on the 4-hour, and then our current candle, right? What story does this current candle tell us? What would we say? Would we say bullish? Would we say bearish? Would we say neutral, right? We've taken the Foundation 2 course, hopefully. We know how to read the story of a candlestick and what it tells us. What would you guys say about this candle right here? This current candle. This is still only the identification part of our process. Remember the 4-step trading process, IPDE. We want to go in order. We want to identify what the market is doing, what the market has done. We then, after we gather that information, then we want to use that information and predict what we think is likely to happen next. And then once we make that prediction, we know the prediction is a 3-part prediction, then we want to decide how we're going to get involved and then ultimately execute the order. So Adam says bullish. What? Adam? How can a red candle be bullish? Well, Akil, look at the wick. Look at the wick, right? The bears have pushed it down, but we're currently trading in the upper third. Now it's a 4-hour candle. We still have about 15 minutes left, but yeah, certainly more of a bullish candle than a bearish candle. Bud says, so are you saying go from 4-hour to 1-hour to 15 and look for confluence between them? I think 4-hour to 15 is a big jump. If you're going to be if you're going to be trading off of the 15-minute time frame, I would use the hourly as my higher time frame. That's me personally. That's as far as I would go. That's like a multiple of 4. I think the 4-hour and the 15 are going to give me two completely different stories, and you'll see this when we go through our analysis, right? So, any other opinions on this candlestick, or are you guys thinking, is this bullish, bearish? How does this affect your identification? And again, since we already know kind of what happened on the lower time frame, we want to do the higher time frame first. But you can ask ourselves this, all right? So Bud says bullish. Okay. So think about this for a second, right? This is bullish. Our trading idea on the 15 was bearish, correct? A bearish structure trade? Are those two things in alignment right now? Is what we identify and what we want to do and there's a prediction in the middle of it we haven't even gotten to yet, but is what we identify and what we want to do, are they aligned? And we need to think about that when we're trading, because imagine if, like, I always go back to like the sports betting reference, right? If someone said, Akil, are you going to bet on Liverpool to beat Real Madrid in the second leg? Liverpool blew a 2-0 lead yesterday. Go Everton, right? If you're going to place a bet on Liverpool, sorry, it makes me laugh every time I say that, bet on Liverpool. If you're going to place a bet on Liverpool, but you think Real Madrid is going to win, does that bet make sense? Does that bet make sense? And insert whatever team you want. Does it make sense to bet on a team that you actually don't think is going to win? It doesn't, right? Why would you spend money on something you don't think is going to happen? Well, think about trading the same way. If we're identifying a bullish move, or even if we're not seeing anything that says a bearish move, yet we're placing a trade that is bearish, does it make sense to place a trade where, in order to make money and not lose money on that trade, we need something to happen that we don't actually think is going to happen? I always like breaking it down into that. And if the answer is no, then it shouldn't be a trade. If everything aligns, if we're saying, hey, bearish move here, or bearish prediction, or bearish identification, bearish prediction, bearish move, those are the trades we want to focus on. So this would give me a little bit of caution. We don't have we have 13 minutes left before the candle closes, right? We never want to judge a candle until it's closed, but we can only work in real time. So as of now, we would say this like, I don't see anything that screams bearish, right? So we go down to maybe an hourly, right? We see a similar situation. Hourly, things change because we have a higher high, higher close now, which puts us in a different scenario, but we're still in this level of structure. And then we see the bears push down here and the spike back up. So again, we want to ask ourselves the question, based on, let's say we're going to the hourly, based on the hourly, is there anything that we see that makes us think price is going to go lower? Because ultimately price needs to go lower for us to profit. And that's the goal of every trade, to profit. So the question is, do we see, and I'm not telling you there's a wrong or right answer, but this is the internal dialogue you need to have with yourself. Do we see anything that says price is likely to go lower? If that answer is yes, then that opens up the door for a trading opportunity. If the answer is no, then you probably want to stay away. So going back down to the 15, where we see this opportunity, where we're saying, okay, man, look at that. Price came to a previous level of structure right here. This looks like a decent opportunity to get involved, right? The answer is yes, right? I think we can all say like, hey, price has retested a previous level structure. This is a decent level to get involved with. But does the overall picture, does the overall analysis, the overall prediction, does that agree with what we're seeing on the trading time frame? And in my opinion, it has to agree. Because if it doesn't agree, then that significantly lessens the probability of the trade winning. Now, if that being said, going back to the conversation we had earlier about, right, judging your trade, maybe this is one where it's like, man, I don't have, we're at a good structure level. We may see a little bit of a pop down, but it's definitely not a grade A trade. It's a let's grade it as a 1. Maybe this is one where you take a quarter risk, because you can probably get a good risk reward, right? You get a lower close here. You get a doji candle, lower close. You're looking at a pretty decent risk reward, right? So you enter right here, very good lower close, stops right above the highs. Let's say you're looking for a retest down here, pretty decent risk reward, 2.5 to 1. So decent risk reward, not so great trading opportunity. Maybe this qualifies as your level 1 trade where, hey, I'm taking blank % risk instead of my normal risk. Therefore, if you win, you still get something out of it. You get that opportunity. If you lose, it doesn't hurt you as much as taking a full position. But does that process make sense? This is why, in my opinion, we always want to follow the process, IPDE. in my opinion, we should always start higher time frame and work down versus lower time frame and work up. Because if we start lower time frame and work up, we're going to have that confirmation bias, right? If you're not familiar with confirmation bias is basically when we're handpicking the information that we want to see and using it to work in our favor. It's kind of like if you're in an argument with someone, but you're only picking the facts that make your argument look good and ignoring everything else. That's what confirmation bias is. So knowing that, man, I got this level of structure in the 15. I want to get short on the 15. I want to get short in the 15. Now, when you go to the hourly, now you're only looking for reasons to get short because you want to confirm what you want to do. So now it's like, okay. Look at that. We almost came back across that whole candle. This is a nice little structure shelf right there. There's a psychological number a little bit higher. Like you're finding whatever you want to find to make it work. And that's not a great way to trade. And you can have confirmation bias off the technicals. I used to have confirmation bias off the fundamentals, right? Again, to think I was a trader, I used to watch like all these trading shows in the morning, and like they'd all be talking like strong euro dollar, buy the euro dollar. So I'd go into the chart and I would ignore every bearish opportunity on the euro dollar because I only wanted to buy it because that's what CNBC and Squawk on the Street was telling me. And I was blinded to kind of looking at the chart in a non-biased way. So we just want to we want to do that. Real quick, George says look for a 1-to-1 instead of the lows. Yeah, or look for a smaller, a risk that makes a target area that makes sense. Yeah, or not, I shouldn't say makes sense. A target area that's more conservative, or implement a risk management strategy that's more aggressive. There's lots of ways you can go about it. Bud says, wouldn't that be a 3-bar reversal on the hourly? Heading back to the hourly. I'm not seeing one. Where am I looking at, Bud? At the tops here? These? This? Or this next one, I should say? Yes. Wouldn't be a 3-bar reversal, no, but let's pretend it was. So even if this was a 3-bar reversal, what does this have to do with a trade here? How does one affect the other? How does the 3-bar reversal, or whatever we want to call this, how does that affect this trade? Because this is the 3-bar reversal, quote unquote 3-bar reversal, has already occurred. So you're not saying you're trading this, you're trading here. So how would one affect the other? That would be my next question for you. What does the previous 3-bar reversal have to do with the current opportunity that I'm looking at? Or is this a confirmation bias that we're using? We're just trying to pull pieces to convince ourselves to take the trade. And again, these are questions that we should be going through as traders, because here's the thing, right? And I'm glad you're being a good participant, Bud. When you're in an environment like this is one of the beauties of a live room, right? You have myself, you have Jason Greystone, you have other traders that you can bounce ideas across and get feedback. And sometimes you see stuff that you didn't think about before. Sometimes you teach someone else something, right? You identify something that someone else didn't see, and we all learn. The hard part about trading is when you're on your own, you don't necessarily have people to ask you these questions. And especially as a newer trader, you don't always know what questions to ask. So there's no kind of, I forgot what it is, I don't know what it's called, but imagine like if you picture your trade, right? Picture this as being the ultimate place where you want to trade, right? And this is your hallway to trading, right? And then within each of these hallways are kind of doors or like things you need to get past, right? So the questions in the process, right? The process is moving this way. And the questions that we ask during the process, well, those are the things on each of these doors. So we're checking the boxes. Okay, boom, next. Checking the boxes, boom, next. Checking the boxes, boom, next. Until we get to our ultimate destination, which is the ability to take the trade, right? if we don't have a process, or if we don't know what question to ask ourselves, we're going straight from point A, right, to trading. And there may be something that we overlook. There may be a structure level we overlook. There may be a news event we overlook. There may be a Fibonacci level, an even handle number, or a psychological level, whatever it is. There may be something that we overlook. But because we're by ourselves and we don't necessarily have these checks to go through, or we don't know what checks to go through yet, we may overlook it. But I would, yeah. So the 3-bar reversal, right? And again, this is not a 3-bar reversal, but let's pretend it is. The 3-bar reversal has no effect on this trade. This is a completely different trade, right? This trade is a 15-minute trade, pullback trade. So this is the trade. The 3-bar reversal, whatever happened back here, nothing to do with this trade. So those are completely different things. Now, if you had a 3-bar reversal on a higher time frame, that would be different. What were we looking at? The 4-hour? So if the 4-hour gave us a 3-bar reversal, or a lower low, lower close, let's say this was lower low, lower close, this would give us a different story. Because now if we reset our process, right? Identify. Did price hold structure, guys? Yes or no? Yes. Price came up the previous structure resistance and held, right? Nice rejection candle. This is a green candle, which is technically bullish, but we know it's a bearish candle because of the rejection, the wick. Then if we got a lower low, lower close beneath that candle, is that a bullish or a bearish sign? Imagine this being a red candle, a lower low, lower close. That's a bearish sign, correct? So now we identify, right, a bearish hold, a bearish signal. We can predict a continuation bearishly, right, to this level right there. Now when I go back down to my 15, right, and I'll keep this on my chart, I have a level that I'm predicting, right, based off what I identified. I'm looking for bearish, looking for bearish, looking for bearish. All of a sudden, all right, pullback trade. This is my target area down here. Sorry for the sloppy chart. All of a sudden, this is a decent trading opportunity. But it's a decent trading opportunity because it's in alignment with what's happening on the higher time frames. It's in alignment with my identification and my prediction. In the current scenario, all those things aren't aligned. So again, that could be the difference between a trade and a no trade, or the difference, again, if you want to do the kind of the balance type of thing, the difference between a full position trade or a partial position trade. So that was a very good question, bud. I appreciate you being a good sport. This is how you learn. We talked about my kid being shameless and raising his hands, answering questions in class. This is how you get little tidbits. And I hope it made sense. And if it didn't, you can always ask me again. You can come back tomorrow and ask me the same question, and I will do the same thing again. That's what I do. I am robotic and boring, but insanely consistent. But yeah, so I hope that explains it. And those are the small differences between separating high quality trades, and we always say that we're looking for high probability trades, right? Not just trades, because anyone can find trades. Anyone can find trades. You can find a trade at any given moment in the market. I always say, give me a chart, give me a time frame. I can tell you, I bet I can convince you to get long or short on the same pair, because we can always make something up. The difference is we want to be that filter. And I say we, because I mean you as the trader. You want to be that filter between taking only the best trades versus every trade. And it may affect your frequency. You may find yourself trading less. I find myself trading less the more experience I get in the market. I trade a lot less now than I did 10 years ago. But I'm extremely confident in every trade I take. Like, I don't take trades that I don't consider to be the best trades. They're less trades, but I don't take any trades that I don't feel comfortable with. I don't take any trades where it's like, like they feel a little forced. I only take good trades. And with the mindset switching over the years from make as much money as possible to you actually make more by losing less, and seeing that, because you got to see it. You got to see it in your P&L before you really believe it. When I saw that trading less for me meant losing less, and losing less meant keeping more, and keeping more meant growing my account faster, I was like, holy crap. The urgency to trade 80 times a day was gone. I didn't need the action. It became boring. And boring trading makes money. So great way to end things. Thank you so much for that, bud. Glad you got that in before we left. That's how we tie a bow in this room. Hope you enjoyed the video. Before you leave, make sure you like and make sure you hit that subscribe button. If you have any comments or questions about anything discussed, feel free to leave it below. I do go through and read each and every one. I appreciate you taking the time to watch this video. And until next time, plan your trade your plan. Have a great weekend.